The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at AgDirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast. I've got Greg Roberg here back from AgDirect. Greg, how you doing, man?
I'm good, Casey. Good to see you.
Good to see you too. We don't do this very often where I get to actually be in the same building as you. So
I know this is a treat.
yeah, so it's very cool scenario. So we're here at the AgDirect World Headquarters here at Farm Credit there in Omaha. So
Yep.
I was in the area, so I thought, it'd be a great time to stop by and see Greg. So
Yeah,
Greg,
I'm glad.
thanks for having me, man.
Always glad to be here, be part of this.
Yep, me too. I'm glad you're part of it as well. So let's talk a little bit about this. I really thought, there'd be more leasing activity, even in 22 and 23 than what we saw. And we were getting kind of started about what we were going to talk about and those kind of things. And you brought up, you saw a spike in leasing activity in the month of March. So I guess talk a little bit about what you're seeing there and maybe what are some of the factors you see behind that.
Yeah, well, we've been talking about cash flow. And
Yep.
at some point with commodity prices the way they are, we're probably going to see more producers say, I'll look at that equipment, look at buying new or upgraded used, whatever it might be. If I can afford the payment, it makes sense with my cash flow. We finally saw that in March. Saw a pretty good pop, not double of what it was in February, but pretty close. So generally our leasing volume is about 7 to 8% of our overall volume. In March, it was about 11%.
Okay.
So not huge, but certainly noticeable.
Maybe the beginning of a trend line, huh?
Could be,
Yeah.
yeah. And we've done a lot more quotes. So I talked to the AgDirect territory managers across the country. They're saying they're quoting a lot of leasing.
Okay.
And so maybe at the end of the day, the farmer decides, I'll just buy it, but they're more interested in leasing. And our most popular lease is what we call lease to own, either a pro or a put. And that means
explain those pro. I know it stands for something. What's the pro stand?
Yeah, no, it's a good question. So let's start with FPO. I
Okay.
guess we talk about acronyms a lot. That stands for a fixed purchase option.
Okay.
And what that means is the customer knows exactly what the residual is going to be. As long as they don't put more hours on it, they can use it, make their payments, and turn it back into the dealer.
Right.
With the AgDirect lease, whether it be an FPO, what we call is a walkaway or a lease to own. Pro stands for purchase or renew only.
Okay.
Put is purchase upon termination. Basically, all that
Okay.
means is you're going to have to do something with that machine. You can't just leave it at your dealer.
Yeah.
And that's with a pro or put. So we call that a lease to own. The advantage is the residuals are a little higher because a lender like AgDirect or whoever that lender might be is generally going to give that farmer a little higher residual because they know that customer or that farmer is going to do something with it.
Right.
They're going to have to buy out the residual, or they can refinance it, or they can trade it in with their dealer.
Right.
But they're going to have to do something with it if it's a lease to own.
Right.
And so to give you an idea, that's about 80% of our leasing business is that lease to own.
Yeah. Okay. All right. So let's go back and talk about your February numbers. In February, did you see a tick up from January, or was it pretty
Flat. January, February leasing was pretty flat, and then we saw a pop in March.
And then you said you talked to your field reps and that their lease quoting had started to creep up even for the month of April.
Yeah.
Okay.
Yeah.
All right. So I like I said earlier, I thought this would happen a lot earlier than what it did, just because of how you're going to structure those things, and like you talked about cash flow and those things that you're looking at. When you're looking at interest rates compared to a traditional retail note versus a lease, depending on what state you are and property taxes and all those things that come into that. But I guess as you're looking at those interest rates, do you see a big effect on those rates?
Well, another good question. You must work at a dealership or spend a lot of your career in there to ask good questions like that. So maybe not every lender is the same. So if folks are looking at a lease, be sure to ask what the rate is. With AgDirect, it's the same rate. It's the same rate for new and used, loan or lease. It's the same rate. All that varies is how much are you going to borrow.
Right.
And if you borrow more money, the lower the rate is.
Right.
So the rate's the same for AgDirect. Now, we do have a lease special. We call it the +5.
Okay.
And what that means is on our on our lease to own. So we're on pros or puts, lease to own. The customer's going to have to do something with it. They can get an extra 5% residual bump. Let's see it for this quarter. So that would be April, May, June. It's on tractors 140 horsepower or higher.
Okay.
And that'd be like your main lines that can all take advantage of that. So newer used. But what that basically means is the customer can get a little lower payment because the residual is higher. The higher the residual, the lower the payment. That's how that works.
Okay. So you're saying that if they do something like that on a put, right? Is that what you said?
Put or pro.
Put a pro, either one. Okay. They get an additional 5% on
the residual.
On the residual.
Yeah.
Okay.
So if the residual is 50%,
right.
And in this case, if it qualified to be 55%.
Okay.
So the higher the residual, the lower the payment
is. Okay. And you said that was between on machines that are 140 horsepower tractors and bigger?
And higher. Yep.
Okay. All right. So
so I believe that's creating some activity in the market, because these machines are, several hundred thousand or more.
Yeah.
Again, there's no limitation on the amount leased. It's just, is it a higher horsepower tractor?
Yeah.
10 years older or newer.
Yeah.
But I think folks are just looking at what are their options.
Yeah.
And I was with you. I thought we'd see a little more leasing activity before now.
Right.
There was just a lot of cash out there.
Yeah. Oh, yeah.
And I think folks, just if you look at the corn price, bean price, if it's in the bin, they're just going to maybe wait for a while, see how things shake out. And if we're looking at different financing or leasing options, this is certainly something to look at. So we encourage dealers, salespeople, farmers, everybody in this industry, look at your options. Look at a loan.
Yeah.
Look at a lease, because they each have different advantages.
Yeah, absolutely. When you're looking at the customers that you're working with that are coming through, are you starting to see more of a trend to where maybe some lower dollar items, and I know that's a very relative term in today's marketplace, but I mean, you're starting to see some lower dollars, like, for example, maybe something where they could have a little more of a thicker equity position, right? For example, they had, a $200,000 machine, and they've got, $50,000 or $75,000 they can put down, and instead of going out and buying that $400,000 or $500,000 machine, are you seeing more of those smaller dollar items coming in, or is it kind of a mix across the board?
Well, it's always a mix, just because we work with for 4,500 dealer locations across the country. So,
right.
And depending on, where you're at. What a couple of things I would call out, though, is a year ago this time, if it was under 75,000, we didn't see a whole lot of those deals.
Right.
There was farmers just writing checks.
Sure.
And I've been in this business almost 25 years. I'd never seen such big down payments as I did in 2023.
Yeah.
So guy might be buying a $500,000 tractor, he's putting $200,000 down.
Right.
And financing $300,000. That's changed a lot.
Okay.
AgDirect, with good credit on machines that are 5 years old or newer, we'll go up to 100% financing.
Oh,
tractors and combines, planters, sprayers. And we're seeing more customers take advantage of either 100% financing or maybe 10% down. And so that's starting to change too, just in the last 9 months.
Okay.
Some of your farmers are saying, I want to borrow as much as I can on this.
Right.
Versus a year ago, I think it had a little bit to do with interest rates.
Yeah.
It was like, well, if I put more money down, my interest cost isn't going to be as high that way.
Right. Yep.
But I think everybody's kind of settled in now that, 6.5% to 7.5% interest is kind of where we're at. It's kind of right now, as we sit here in April, as we look out in our crystal ball, it probably is going to be around that for the foreseeable future.
Yeah.
Hopefully not any higher. If it went anywhere, hopefully lower. But, as we continue to hear data coming from, the economy every month, jobs and consumer price index, all those kinds of fancy things, economy is cranking along pretty good.
It really is for all the headwind that you hear about. There's a lot of stuff popping up from there. When you're looking at, I guess, what would be some of the advice that you give somebody right now if you're talking to them, looking out here? The Fed said they want to lower 3 times, and they're kind of back and forth on that. That maybe it's once, maybe it's twice, maybe it's 3 times, maybe we don't lower at all.
Right.
I guess, but as you're looking at the portfolio that you're looking at and people working around, I guess, as you're looking at your customer base, if you could say, what's the one piece of advice you give somebody that's looking at upgrading a piece of equipment now when it comes to how are you going to measure when's the right time to do that, based around your equity position and interest rates and those kind of things?
Well, the lender and the old banker in me would say, can you afford it?
Right.
Make sure you're making a good decision for your business.
Sure.
And that's where payment comes into play. And so think about, what is that payment going to be? Does it work in my cash flow?
Right.
It's because that way you don't get yourself in a bind where, you've got to sell grain sooner than you wanted to. And if you can figure out what is your payment and what you want that to be, again, whether that be a loan or a lease, I don't know if I get just too hung up on what the interest rate is, because I don't see rates going down much, if any. And if rates went down 0.5%, that sounds good. But when it comes to a payment, that really doesn't do much.
No. Grand scheme of things, 0.5% when you're going from 7 to 7.5 or 6.5 to 6 or something like that.
Right. But my advice would be is if you're in the market, go talk to your dealer, because dealers right now have inventory. As you drive around and talk to folks, they have inventory.
Yep.
And so they may have exactly what you're looking for.
Right.
Unlike a year ago, and certainly 2 years ago, when if you're looking for something that's going to be, it's got 4 tires and low hours, I'll take it. Whereas now it can be.
Right. Yeah, now it's like, it's got 4 tires and a windshield. So now we can go from there.
Right. It could be spec'd out exactly the way you want. And so even though everyone's maybe a little cautious right now, we're optimistic that, this market's going to keep chugging along and it'll be a good year. Hopefully Mother Nature does her thing and brings rain across much of the country as we start thinking about planting.
Yep.
But
That time of the year.
yeah, but it's always something, isn't it?
Yeah.
In agriculture,
That's never easy.
a couple of years ago we didn't have enough inventory. Now we have inventory,
Yeah.
but we have interest rates that are a little higher than what we're all used to, and of course commodity prices are what we'd all like them to be either. But I would that would be my one: make sure you can afford it, make a good business decision, make sure that it's a need and not a want.
Right.
But two, then I bet your dealer or the dealers you work with out there on our audience may have exactly what you're looking for. If they don't have it, they probably know how to get it.
Yep, for sure. And one last thing I'll throw out there: a lot of auctions happening right now. A lot of things like that going on. You can see a lot of that stuff out there. And one thing cool about AgDirect still is you can buy stuff at auction and get it financed.
Yeah, I'm glad you mentioned that because we saw a pop in leasing in March. March was our largest month ever in the history of AgDirect for our auction business.
Is that right?
Yeah.
Wow. Okay.
And so it must have been, more dealer auctions, but just more auctions out there in general.
Yeah.
And so folks are starting to catch on whether, they buy from the dealer. That's still our bread and butter. That's still the majority of our business is working through dealers.
Yeah.
But customers that buy from a farmer or on auction, whether it be an online auction or they found it, over the weekend at one of those, community auctions.
Yeah.
Give us a call. We'd be happy to take care of them.
On that process, I've always been curious about that. On that process, is that one of those you can get a pre-approval type of thing?
Right.
You're approved up to X dollars and
Sure.
go out and bid on that?
Yeah, it could either way. You can give us a call ahead of time and say, hey, I'm looking at buying this. This is about how much I want to spend. We can get them pre-approved. Or if they've already bought it, and they write a check for it and then want to come back and say, okay, I just put in my operating line. I really want to turn this out. What can you do for me? We can work both situations.
Gotcha.
So main thing is we want them to think of AgDirect.
That's right. That's right. Okay. Well, Greg, good stuff as usual, man. I appreciate you being here. Let me be here today.
Yeah, anytime.
And if folks want to reach out to AgDirect, what's the best way to do that?
Number of ways. You can go to agdirect.com and you see our rates. You can submit an application right there. You can scroll at the bottom and find a territory manager if you want to see somebody in person or if you want them to reach out to you. But we're always here from 7:30 to 5:30 Central, 888-525-9805. We're one of those places where we believe when you call it, you should hear a real person.
Right.
And
that's rare these days.
we continue to do that. So please give us a call. We're here to help.
Awesome. Well, Greg, thanks, man.
Thank you, Casey.
We'll catch you next time.
Sounds great.
Hello, and welcome to Moving Iron Podcast. I've got Tanner Ehmke here from CoBank to talk about what's going on in the world of ag economics. Tanner, how you doing this morning, man?
See, how you doing?
Doing good, buddy. Doing good. All right. We've got some movement. Last time we were on here, we were talking about short positions and if that, it would just take one thread out there to get pulled that could start really making that unravel. Feels like we're starting to see that a little bit right now. I guess the wheat crop is not turning out as good as they had hoped for. Last report I saw coming out of I can't remember, Successful Farming or Farm Journal, one of them, I can't remember who it was, but they had shown the Kansas wheat crop, a third of it was either rated poor or very poor. And that's a big chunk. So that means that there's not a whole lot of good wheat out there when you're looking at that. So I guess talk a little bit about the wheat market there and how you see that kind of reshaping this corn or this commodity pricing that we're seeing right now.
Yeah, it's all about wheat right now. Corn and soybeans are taking a little bit of a back seat to what's going on in the wheat. So as you talked about, Kansas is not doing well right now. That's the state you got to be concerned about. When you look at the other states like Illinois, in soft red country, the crop is doing extremely well. It's doing, phenomenally well. If you look at their good to excellent ratings, they just keep going up. But if you look at Chicago wheat, this morning it was up 25 cents.
Mm-hmm.
Where are we at? It's just on a tear right now.
Yeah.
So what's this all about? Is it about what's going on in Kansas? I think that's part of it. The crop conditions are really falling apart in Kansas because it's so hot and dry as we head into grain fill. The crop is in the boot, which means that head is coming up, the shaft is coming up the stem, about ready to pop out and head. And that's the most important. This is the most important vulnerable period here where the crop needs moisture to fill that grain, okay, to fill that head with grain. And so the hot and dry conditions are coming at precisely the wrong time in Kansas. So there's plenty of reason for Kansas City wheat to be up. So what's going on with Chicago? Well, because of substitutability, Chicago prices are going to be up as well, even though the soft red crop is doing quite well. The other thing here, Casey, that we got to keep an eye on is Russia. Okay, right. So that has really been the issue here with wheat prices over the last couple of years. If you look at the stocks to use ratio globally of wheat, we are tight.
Yeah.
You wouldn't have known it by looking at price over the last couple of years, but we are tight on wheat around the world. Okay. And so why have prices been coming down? When you look at from the peak of when Russia invaded Ukraine, prices went vertical. Okay. And then they came back down. But then prices just kept falling over the last couple of years, just almost nonstop. And that's been hard to look at. If you're a person who tries to forecast wheat prices, you've been wrong. Because if you've been looking at the stocks to use ratio and all the global risks to the global wheat trade in the Black Sea because of war, there's just been no rhyme or reason as to why wheat prices have been falling for the past couple of years. And it's been because of Russia. Okay, Russia has had growing acreage. They had record yields over the last couple of years. And then in addition to that, their currency has completely fallen apart. It is the weakest it's ever been. And so you have two record crops, two very big crops back to back in Russia with the aid of a currency that is continually getting weaker. And there's just no way you can compete against that. Russia has put its thumb on the scale, if you will, of world wheat prices, when world wheat prices should be climbing to discourage consumption, to ration supplies, and to stimulate more production around the world. The prices have actually been falling because Russia has distorted everything. The name of the game here over the last couple of years has been Russia and everybody else. Russia's just going to tell you what the price of wheat is. And if you don't like it, go pound sand.
Right.
And now, because in Russia they're about the same growing season we are, they're off a few weeks, but it is very hot and dry in southwest Russia at the same time when it's hot and dry in Kansas.
Right.
So this is culminating into a very concerning situation for wheat. After 2 years of just sitting here looking at wheat and thinking, man, when is this going to be over? Wheat is just a dog. It doesn't make any sense. Well, really here, Casey, I think the story is really about Russia. Kansas is important, don't get me wrong, but it's about Russia because Russia has been the one that has crushed wheat prices over the past couple of years, even though prices
should have been
going up if you would have modeled it out. Hey, stocks to use is tight, prices go up. Well, Russia said, nope, not anymore. We're changing the game. Well, that now may not be the case because their crop is getting in trouble, and they may not have the bushels there to influence the world market like they've done over the last couple of years. And so now the market perhaps is waking up to the fact that without Russia, bushels around the world are quite scarce. Mm-hmm. And now we're in a tight stock situation, and without Russia, we got to start rationing supplies.
Yeah, that's the key thing about that whole conversation is that the wheat price. You're exactly right. Even oil to some extent has been reflective as to what Russia's been doing because they want to make sure they get all the sales they can. So they're going to be undercutting the market, and then when someone's doing that, you've got to compete with what's going on around it, and that's what you're seeing. So it's the situation in southern Russia which is their key wheat growing area, is about as bad as it is in Kansas, from what I understand. I mean, from what I've read. So it's a kind of a tale of two tapes there, where you're seeing very similar things happen. Yeah. Let's jump down and talk about what's going on in South America. If you look at Brazil, they've just like they had last year, they've got serious flooding in the south, and they've got some serious drought situations going on in the north. Argentina's got a bit of an issue with their corn crop too, as you look at some drought situations that they have. So I guess looking at that stuff there too, now you're starting to see some of that get baked in. And this is kind of one of those deals where all of this bad bullish news, I guess, for lack of a better term, is kind of coming together all at one time. You're starting to see some big movements in corn and soybeans. I think, last time I looked here, which I got to have my numbers up here, but my mid-morning alert that I get on my phone, we had November beans were up 9 3/4 right now. You're sitting at just shy of $12 at 11.97. December corn is up 6 1/4 at mid-morning, and so that puts it at 4.85 3/4. So starting to see that number inch up closer to that $5 mark. Starting to see that $12 mark come back on beans. The last week, going into this week, you've seen some big explosion, especially the last couple of days in the corn and soybean market. There's some stuff about some crush pressure that you're seeing on soybean meal. That's kind of driving that too. So as you look at these scenarios, that again, you talk about world supply, and we're starting to see some pressure here.
Yeah, that's culminating, or that's in addition to the concerns we're seeing in Russia. You're talking
Right.
about basically the stories going on here in two different export hubs, South America and Black Sea. This is more of a story about what's going around the rest of the world than what's going on in the U.S. when it comes to corn and beans. But yeah, there's some concern there in Brazil. Mostly, I think there's a lot of concern here about Argentina, as you pointed out. It's been hot and dry in the north, as you pointed out. That reduced the safrinha crop yield and what their total production can be. But that didn't really matter so much because Argentina was carrying the difference here. It was Argentina coming back with a huge corn crop this year after having a severe drought last year. They came back with double the production. So the losses in Brazil didn't matter as much. Okay, you had Argentina making up the difference. Well, now here we are. Maybe not. Argentina's, drawn a bad hand here at the wrong time, if you will. They've got this insect disease and the stunt disease that is impacting their yield potential, and so now Argentina and Brazil combined are going to be a little bit smaller over last year. It looks like on their total corn production for South America. And that's going to tighten the world balance sheet at a time when we've got reduced acres here in the U.S.
Yep.
We are shrinking our acres because soybeans picking up more acres out of corn. And so you've got reduced acreage here in the U.S. combined with what's looking like a much smaller crop down in South America. Hopefully there's some farmers out there that are seeing this as their marketing opportunity to lock in some corn prices if it goes back above 5 if we continue on this trend. But at any rate, there's the story really is what's going on outside of the U.S. And like it or not, that's kind of the theme of the way it is these days. Since so much of our market share on exports has been picked up by South America and the Black Sea.
Yeah. So that'll be interesting to watch how that plays out too, because if South America starts coming up short and they're going to limit the amount of exports they have, obviously they're going to take care of themselves first. That opens the door up for China to come into the United States and start buying stuff from us. Talk a little bit about where you see the dollar at right now and how some conflicts you may see there with the strength of the dollar overall.
The dollar hasn't been helping us at all.
Right.
It keeps getting stronger. It's been fairly resilient. I haven't checked it today, but the story here is that the U.S. economy continues to defy expectations. We still have not had a recession, which has defied all expectations. In fact, the Federal Reserve, I don't know if you've talked about it earlier, but the Fed has signaled, we're going to stay put on interest rates because inflation is not coming down to our liking. It's not anywhere where we want it to be. It's still fairly strong. And so, that has caused the Federal Reserve to walk back some of their comments because back in March, inflation was up 3.5% on the all CPI. When you take out food and energy, core CPI is 3.8%. I mean, that's not anywhere near the Fed's target of 2%. That's not even close. The other thing, though, here Casey, is that the jobs report came out and it was a little bit lower, and as hirings are slowing, unemployment is starting to tick up a little bit. So perhaps we're starting to see some early signs that as the economy slows, maybe inflation is going to slow with it over time. But it's right now, the economy is still chugging along. As people call it, it's the little economy that could. It just keeps going.
Keeps getting better. Yeah.
And when you got the U.S. economy being strong, that means the dollar is going to be strong because the demand for the dollar goes up. It stays strong. And so no sign here that the dollar has any reason to come down. It's going to take a recession or a weaker economy here in the U.S. or a strengthening global economy to turn that around. And there's really no sign that I've heard of that, like the European economy, that's the main one, or China, are going to be on an economic tear here that's going to weaken the dollar versus those currencies. I haven't heard any of that talk. Really, here it's the U.S. that's in the driver's seat. We see a slowdown in this economy for our currency to weaken. And like I said, the jobs report this morning indicated that we are slowing down a little bit, but it's not a recession.
Right.
So the dollar is going to stay strong, and that's a headwind to our grain exports, and that's going to keep grain prices depressed from that standpoint. The only reason we're seeing a change in the tone of the market the market fundamentals here is because of what's happening outside of the U.S. with, as we talked about, crop concerns down in South America affecting corn and soybean prices, and then crop concerns happening in Russia affecting wheat prices. That's what's changing the story.
Yeah. Okay. So when you're looking at, so let's talk a little bit about this a little bit. So obviously the dairy situation with the avian flu, it sounds like that's kind of been resolved to some extent. Where it's still out there, but so far between checking ground beef and understanding that pasteurization of milk is kind of eradicating any issue that they're having with that. They haven't found that in any beef yet. I guess as you're looking at that situation there, that's kind of calmed that down a little bit. Colombia did jump up and say, "Hey, we're not going to take U.S. beef anymore. We're this scared." But that's really not a big player on the big picture here for U.S. beef. As you're looking at this transitioning, we've had some pretty relatively high beef prices here of late. As you start seeing these kind of switches into the grain side, as you look at that, what's your thought is that? How is that going to affect the overall beef marketplace? And are you expecting to see maybe a slide in some beef prices here as we go into the grilling season?
It's a great question.
Crystal ball time, Tanner.
Well, that'd be a better question for Brian Ernest, our animal protein analyst. I don't know. There might be the consumer's been stressed. A lot of consumers have been stressed financially. Credit card debt is going up. Savings are down. But it's a bifurcation of the U.S. economy where you've got top earners that are still pulling inflation higher because they have cash to. So those consumers that are being stressed, are going to trade down. They're going to trade down the chicken. If they can't afford the beef cuts now. So there's always that dynamic of what's going on. I'd have to look a little bit closer at those numbers to see what's going on with boxed beef and things like that. Like I said, Brian's going to be paying closer attention to what's happening there. But I'd say the slowdown in the U.S. economy ultimately is going to result in a slowdown of beef consumption. It would just be applying math here. I mean, fewer consumers have disposable income, so that means they're going to be forced to trade down. I'm not one to say that cattle prices are going to fall out of bed because the cattle herd is the smallest in I think 7 years. Yeah,
that's kind of the leading indicator there is that the cattle herd it's still decreasing if you start looking at the numbers.
Now that being said, slaughter weights are up. I think it'll be high because when you're buying feeder cattle, where were they at? I haven't even checked today, but expensive cattle need to be fed a long time with cheap corn. You got cheap corn, expensive cattle. What do? You got to run more feed through them. That's how that works. And so that's why slaughter weights are up. And so that's kind of taking the edge off of cattle prices, some. But I would say really this all comes down to the U.S. consumer now at this point of how much are they going to push back on beef and trade down to lower cost proteins. Going forward, I would imagine that that's what they're going to have to do. Given what we've seen with the job numbers this morning, if hirings are slowing down, and if wages are slowing down, then that means we're going to see less disposable income, and then that's going to trickle down into more pressure on consumption of beef.
Yep. Okay. Well, Tanner, anything else you want to throw out there before we close down the podcast? Any final thoughts?
One thing on corn demand, one positive, is that ethanol demand is really strong. So that's what I would say. That's putting a good or stronger floor under corn prices right now. When you look at those ethanol numbers, man, they're making ethanol. That's because fuel prices have been good or have been improving, and so hey, that's another positive.
That's something I haven't heard a lot about. So there was a big, the big push not too long ago on the renewable jet fuel and how about soybean crush and those kind of things. Where's the EPA on that now? I know they were kind of back and forth on that a little bit, but have you heard anything different on that?
Well, they just came out with an announcement this week, and long story short, I don't want to take up too much more here, but it doesn't sound like we're going to see a huge increase in new demand here from SAF. Really, what the story here currently is what's going on with current margins for ethanol producers. And, over the last few months, corn prices and natural gas prices have been attractive. There's been a healthy margin here to produce ethanol with corn. And so that's what's been driving it. And I think at the end of the day, that's going to continue to be the what you got to look at in terms of usage. What's the spread between ethanol and gasoline prices, and what's your cost of production with corn and nat gas? I mean, those fundamentals matter every single day.
For sure. All right, Tanner, good stuff as usual. If folks want to reach out to you and get more information about what you're doing over at CoBank, what's the best way to do that?
Well, you can find us at cobank.com, and you can find our research on the Knowledge Exchange tab, and reach out to us there.
Right on. A lot of good information there, and it's all free. That's another thing about it. It's all free. So check it out. All right, Tanner, appreciate you being on the podcast, man. I'll catch you again next month.
Yeah, thanks, Casey. See you.
Right on. In case you see more with Moving Iron Podcast, check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. Go to LinkedIn at Moving Iron Podcast. Check out the YouTube channel at Moving Iron Podcast, and go to TikTok as well at Moving Iron Podcast while it still exists. So check that out. Go to Moving Iron LLC for everything Moving Iron related, and check out all the stuff that's going on in the world of Moving Iron. They got the Moving Iron Summit coming up here in Nashville, Tennessee, November 4th through the 6th, and I think Tanner might come to that. Hope you do, and we'll be down for that. So with that, I'm Casey Seymour with Tanner Ehmke. Let's go move some iron, folks. Out. Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment. but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at AgDirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time